Hi all and welcome to our weekly report for the week starting Monday the 10th of June. We have a busy week ahead of us which starts on Monday with Japanese GDP, Chinese trade balance and UK manufacturing data. On Tuesday we get the UK employment rate and also average earnings. Also look out for US producer price index data. Going forward, Chinese and also US consumer price index data, in addition to US crude oil inventories, are the main point of interest on Wednesday. On Thursday, we get the Australian employment figures for May. The week will finish on Friday with Chinese retail sales and also industrial production data. Now, let's take a look at few markets. This is the 4-hourly intraday price action for euro dollar. We have a bullish breakout higher above that key previous resistance area at 1 spot 1250, 1 spot 1260 that we were talking about last week. The price action currently appears to be capped by 1 spot 1350 area on the upside. Controlled pullbacks from the current highs into 1 spot 13 and a rally from there, or potentially dip towards 1 spot 1260 and a rally from there, would further support this current bullish breakout price action, potentially targeting upside resistances towards 1 spot 14, possibly even 1 spot 1450, which is signified by this current swing high. Alternatively, deeper correction lower and a loss of 11260 could open the way for a deeper retracement and the retest of additional downside support towards 1 spot 1220, possibly even 1 spot 1170. Only a confirmed loss of 11170 would completely negate this bullish breakout, potentially targeting additional downside extensions towards 1 spot 1127, 1 spot 11, 1 spot 1080. Sterling dollar appears to be downtrending. It's currently capped by 200 period moving average in 4-hourly time frame. This appears to be a rising wedge, which is an oversold bounce back. These type of patterns tend to break to the downside if they're found in a clearly defined downtrend. Key trading levels for us to watch is at 1 spot 28, 1 spot 28.37, which is signified by this 200 period moving average and also R2 in daily pivot. So there is a zone of about 30 points or so. Bears appear to be in control below that level, especially if we see a dip lower and a retest from underneath of that 1 spot 27.38. That could potentially incentivize bears to engage and open the way for a deeper retracement and continuation of this selling pressure towards 1 spot 26.48, possibly 1 spot 25.50, even 1 spot 24.60 to the downside. Alternatively, either a shallow pullback and a breakout, or a breakout and the end of day close above this current significant resistance at 128.37 could negate the bearish intraday outlook, potentially targeting additional upside resistances initially towards these fib retracements. So if we take swing high to swing low, our 50% fib retracement will be slightly above that R2 128.37. It would be 128.65. That will be a 50% fib retracement. Breakout above that level would bring us to 61.8 fib retracement at 129.40. Above that, 130.26. Dollar Japanese yen also appears to be under pressure, so weaker US dollar and Japanese yen strength. The price action is creating the sequence of lower highs as indicated by this falling resistance trend line. The price action is currently capped by 50 period moving average and also 200 period moving average in 4-hourly time frame. The key point of resistance on the upside is at 108.70. Price action appears to be bearish below that level, so either a spike into that level and a rejection, or the loss of these current lows and a gradual move lower could potentially target additional downside support towards 107.70, possibly 107.20, even 106.50 over a medium time frame. Alternatively, if we see a breakout above 108.70 and the spike higher, the next additional resistance to the upside is located here at 109.22, as indicated by this falling resistance trend line, also 200 period moving average, and also the cluster of these previous highs dated 13th of May. Only the end of day close and the breakout above that level would negate the current bearish outlook, potentially targeting upside resistances towards 110.22, 111, 111.75. Gold appears to be very bullish with a massive breakout higher above 1300, which is a psychologically important level for gold. Over the past week, we had successful breakouts of 1310, 1322, and even 1333 levels. The current price action is trading very close to current significant swing high at 1346. Controlled pullbacks and corrective pullbacks lower and continuation of this uptrend could possibly retest 1331 for a spike higher, loss of that level possibly 1320 for a spike higher. That would indicate this bullishness, potentially targeting upside resistances towards 1346, 1355, 1360, 1365 to the upside. Alternatively, if we see a corrective pullback and end of day close below 1320, that would negate the current intraday bullish outlook, potentially indicating a deeper retracement towards 1310, 1298, possibly even 1287 to the downside. Lastly, let's take a look at crude oil. Crude oil appears to be under pressure as well, as indicated by this falling resistance trend line. We have a sequence of lower highs. The price is capped by 50 period moving average and also 200 period moving average in 4-hourly time frame. This falling resistance trend line is the daily falling resistance trend line, pointing to a major resistance area at $60 per barrel, which is a psychologically important round number. The current price action appears to be capped from the intraday perspective at 54.90. Bears appear to be in complete control below that level, potentially targeting additional downside supports towards 50.20, 50, possibly 47.50, even 47 to the downside. Alternatively, if we see a breakout above this current resistance, therefore a trend line 50 period moving average and the pivot at 54.89, a retest of that level up from above as a newly found support and a corrective move higher, that would open the way for the retest of additional resistances towards 57.60, which would be a cluster of these previous lows from the consolidation. Breakout above that level could potentially target that magical $60 per barrel again. Only the end of day close above $60 per barrel and retest of that level from above as a newly found support would completely negate this current intraday bearishness, potentially targeting higher upsides towards 62.30, possibly even 65. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.